Welcome to the monthly economic and market update. My name is Myooran Mahalingam and it's my very great pleasure to be chatting with our senior economist, Bob Cunneen. Hello, Bob.
Thanks, Myooran.
The month of July saw something that's never happened in the last 10 years, which is the US Central Bank cut interest rates. Would you care to explain, Bob?
Yes, so the Federal Reserve, America's central bank, has cut interest rates by 0.25%, which is quite extraordinary given that there's still a very solid US economic growth profile at the moment. Unemployment's down at 3.7%, lowest in nearly 50 years. So from that point of view, the Federal Reserve has signalled that they're cutting interest rates because they're concerned about the global economy, and in particular the trade tensions. So this issue between America and China in terms of putting tariffs on imports has caused the Federal Reserve to cut interest rates. And Wall Street has rallied quite strongly on the back of this. So the S&P 500 made record highs above 3,000 in July. But since then, since President Trump has raised tariffs again on Chinese imports, the American stock market has fallen quite sharply in early August.
And so this cutting of interest rates is symptomatic of slowing economic activity. Is this a mid-cycle slowdown, Bob, or is this something that's going to be more prolonged?
Well, in terms, the American economy is doing reasonably well, but the global economy is essentially struggling. So if we think about China's economic growth being the lowest in about 15 years, we think about Europe, also very slow 1% type economic growth. UK is facing Brexit. So all these global risks have caused the Federal Reserve to say, America's okay, but there are downside risks to the American economy because of these global concerns.
On the political front, there were two events that got headlines in the newspaper. One was the trade tension between President Trump and China, and secondly, the United Kingdom has a new Prime Minister.
Yes, so Boris Johnson is now the Prime Minister after Theresa May, and Boris has promised that Britain will exit from the European Union on October the 31st. And he's prepared to take Britain out without a deal with Europe. So this is known as a hard Brexit, and it opens up downside risks to the UK economy because Europe is their key trading partner in terms of exports. So if you think about cars such as Jaguars and Minis going to Europe, this is a key concern for the British manufacturing industry and for the wider British economy, that they won't have as good a trade access as they have in the past.
So with this trade tension, uncertainty around Brexit, slowing economic conditions, central banks cutting interest rates, why are stock markets hitting all-time highs?
It's specifically America in terms of the Standard & Poor's, and Australia. So Australia has benefited from a lower Australian dollar, but also the Reserve Bank cutting interest rates in June and July. But what we have to bear in mind is that the Australian economy is still struggling. We have housing construction that is falling, car sales are weak, retail spending is subdued. So the Reserve Bank has responded by cutting interest rates, and with lower interest rates, that's pushed up the share market. So that's a positive, but we need to see an improvement in the Australian economy to see that this share market performance is sustainable.
Bob Cunneen, thank you very much indeed for your time.
Thank you, Myooran.